So if you're between 18 and 30 years of age, you guys want to check this out. We're going to talk about 4 stocks that have so much potential to grow your portfolio. Now, before we start this, guys, check out all the links down there: Acorns, Robinhood, free Discord, and following me on Instagram. All good things that you guys should check out. I'm not going to get into it, but we're going to talk about 4 stocks. If you're between the ages of 18 and 30, then these are 4 stocks you guys want to check out. I'm not saying you should invest into them. I'm not giving you financial advice. I'm just telling you that this is a good way to kind of increase that portfolio. Now, 4 stocks, okay? For me, if I was 18, 20 years old, I would only focus on these 4 stocks and buy nothing else, okay? And I'll be explaining why. But first, I'm going to be explaining the stocks that I'm talking about. So we're going to be talking about the growth stocks first. Now, the first growth stock is going to be Apple. Now, why Apple? Because Apple has a consistency of growing, okay? They release out their phones yearly, come up with new lines of phones, new AirPods, new watches, new everything, right? And they sell. So they have a bunch of revenue. Apple has about $150 billion of free cash flow. So that's one thing you have to understand. That is huge. Free cash flow. That's just money sitting in the bank that they can use for whatever they want. That's after they pay their employees, after they release their products, all that stuff is just free cash flow and it keeps growing. So first of all, that's one good thing. Apple has potential for so much growth. If they do what they're doing in 2024 with releasing their vehicle, then this is going to put them in another level as well. It's going to create more revenue, and I feel like the stock can hit about $300 to $400 again by 2024. So there's so much potential and growth there. Now, also, guys, the reason I like this is because Apple does pay a dividend. As you see, they have a 0.61 dividend. It's not that high. It's about 20 cents per share, but honestly, it's better than nothing. For a growth stock to pay a dividend, it's unheard of. It's insane. It doesn't really happen, but Apple just has so much money that they can actually give some of that back. They do increase their dividend. They've been increasing for about a decade already. So they're constantly growing it. And this is just putting them in another level, guys. So honestly, it's a really great company. It has so much potential for future growth, and everything they're doing in their business is working for them. So Apple is a really great company to actually have in your portfolio, especially if you're an investor. Now, what scares people off is this stock price at 132. But honestly, if you could buy fractional shares, that's all you have to do. You're still getting growth in that fractional share. Don't always try to chase something like, something that's not good. Don't chase a cheap stock for no reason. You get me? If you think it has potential. Apple has potential and is the potential. Okay, they're the dominant in their sector. All right, so that was the first growth stock I was talking about. Now we're going to talk about the next one. Now, this one I talked about a lot as well. It's Microsoft. Microsoft is in the same sector as Apple. And it's a great, again, huge company. They have about the same amount of cash. They have about $150 billion in free cash flow as well. They can do whatever they want. They just acquired a new company. They're coming up with just so many products right now. So they're coming up with the VR thing that they're working with the government. They're working out with the cloud that they're also going to be working with the government. They're releasing a new service system that you can play games for in your iPhone that you pay $15 a month, where you can play all these title games, which is completely insane. They're going to bring a lot more revenue because of that. And also, again, like I said, they have a lot of money in hand. They do have a 0.83% dividend. So again, they're a huge growth company that also pays a dividend. Market cap is at 1.97 trillion. So honestly, guys, who doesn't know Microsoft? They have computers, they have, buds, earbuds, they have they have phones, or not anymore, I think, but they're working on a phone. So we'll see how that comes out. But they mainly work with computers, with Microsoft Word. They have all these acquisitions, all these companies, LinkedIn, stuff like that they own, and it brings them a lot of revenue. So Microsoft is a big company, especially like Xbox. I forgot to mention that. Microsoft is just completely insane. So if you can only buy fractional shares, then that's fine because people get scared because of this high price. But again, if you can only put $100 in, then it's a good start because whatever returns you get those returns. If you get a percent return from $100, then that's good. If it jumps up 10% in a year or 12% in a year, then those $100 go 12% up as well. So, that's something you have to understand. So first of all, I would say if you're between 18 and 30 years old, I would go heavy on Apple and I would go heavy in Microsoft. Now, this is where you kind of start diversifying a bit, which, like I said, this is only going to be four stocks that I recommend you guys buying. I won't say buy five, six, seven, eight, none of that stuff. Forget about all the other stocks and focus on these. Okay. So the next stock I'm going to be talking about is Prospect Capital. Now, why am I mentioning Prospect Capital here? Because it's a cheap stock that has a high dividend yield. Now, it does have 9% dividend yield, which is completely insane. And it is a bit risky because, it's that high. And people get scared because they're like, oh, they're going to start paying their dividend, stuff like that. I mean, I've had this company since 2016 and they've constantly paid their dividend. They had a bad year last year where their stock price tanked to about $3, but they still paid their dividend. We had a pandemic and a lot of people cut their dividend or stopped their dividend. PSEC was like, nope, we're still going to keep paying it. And they've been constantly paying it and they've recovered. So that's why I like Prospect Capital. I mean, they've had acquisitions lately, which brought the stock up. As you see in this past month, it's gone up pretty well. It had this little drop, but it had this gain back. So Prospect Capital has actually been growing pretty fairly well. And again, with this dividend, you can buy a bunch of shares and get that great dividend. For me, I own 100 shares right now, and my return will be every month. So understand they pay every month. They pay 6 cents per share at 100 shares that I have right now for the equity of 816. I'm going to be getting about $6 in dividends a month. 6 times 12, you do the math. Those are my returns for this equity. So it's not bad at all. So this is why I'm putting this stock in there. It doesn't have as much growth, but it has a really high dividend where that money can quickly grow for you. And because they pay a monthly dividend, if you put that amount of investment, let's say you buy $1,000 worth of Prospect Capital, it's going to be buying itself a share every month. So every month you're going to have an extra share just because it's buying itself. So this is the thing that we want to do with Prospect Capital. Between your 18 years of age to your 30, this thing is going to compound so quickly if the dividend stays at that price, because you always have to pay attention to it. That's why it's a bit more of a risk. But if it stays around that price and it grows up a bit more throughout those years, you're going to be compounding and your portfolio is going to expand quickly. So this is one of the reasons I do check Prospect Capital, because you have your two big growth stocks that still give you returns. If Microsoft and Apple start trading a bit sideways, then you don't have to be impatient about your portfolio staying stagnant because they're paying that dividend. Even though it's small, you're still getting a return, and Prospect Capital will be carrying that gain up. So if these are staying stagnant, then you're going to be getting that dividend, which your portfolio is going to keep increasing up, right? So then we're going to jump into the last stock that we're going to be talking about. Now, that last stock we will be talking about is going to be Realty Income. Now, Realty Income is a bit of the higher price, but the reason I'm talking about Realty Income is because they also pay a monthly dividend. They do pay a great dividend. They do increase it every month, little by little, by a fractional penny, but they still increase it. So they're keeping up with inflation very well. They're giving you good returns quickly, and Realty Income is actually growing pretty well as well. They're not like growing heavily, but they have good growth. They're acquiring new lands, new territory, stuff like that, where, this year has actually been really good for them. Even though we had a pandemic, Realty Income thrived and they acquired so many things. And because of the new laws where, they don't have to pay certain, amount of taxes and stuff like that, then they were able to acquire just so much with all that capital that they had. So Realty Income honestly is just starting to grow big. And as you see in the past month, they've been up 12%, guys. 12% is completely insane for a company like this. So Realty Income still has potential for growth and constantly paying that dividend. I honestly think Realty Income could become a $100 stock within the next year or two. So that has potential for growth with a monthly dividend where you can reinvest that and it could compound a lot quicker. So you'll get, again, like I said, growth with Realty Income and a good dividend. So Realty Income would probably go between an average of 7 to 10%. You know, Prospect Capital would grow between 4 to 5%, and Apple and Microsoft should grow between 10 to 12% if they have good years, right? This is all speculation, but if they have those growths between the ages of 18 and 30, your portfolio could expand so well. Okay. And like that, your capital will grow quickly. Now, for me, with my cousin, I have a little cousin, he just graduated from college. He got his bachelor's. He does have some free money. So that he's worked, he had his job and he's had a good little savings and he's investing into Apple. So what I kind of did with him is that I told him, hey, invest into Apple, right? I told him this last year. So I told him, hey, just put in $5 a day. Can you do that? He's like, yeah, I'll put in $5 a day. Don't even look at it. So he put in $5 a day with Apple. Every time the market's open, $5 goes into Apple. So it's been already a year. And his growth has been completely exponential. And this is the thing I talk about. If you invest into a good company, your gains can be really huge. And he's constantly been getting his dividend and he's buying at a good average. So if the stock comes down, he keeps buying when it's down. If it goes up, he buys when it's up. But at the end, it averages down to a really good price. And he's up so much right now that it's completely insane. And I told him, hey, don't worry about it. Wait till 2025 to look at it, and 2030 to maybe cash out or, move your money somewhere else. But I told him focus on one stock. And I know people are kind of focused on diversifying their portfolio because they're scared of losing money if they're not diversified. But if you're young, I think you should take a more aggressive approach. That's what I did. I focused on stocks that I knew were going to do good because I knew they were great companies. For me, I don't think Apple's going to crash anytime soon. I mean, they just have so much money in hand. They could not have any kind of revenue. They can completely close down Apple and they can still survive for the next 4 or 5 years. So that's how much money they have on hand. And this is what I kind of see in companies. I try to see these companies that can do really well for my portfolio. Now, Apple and Microsoft are companies I would keep long-term for the rest of my life, but you'll eventually have to diversify, right? So for me, I just focus on like 4 stocks like this that I would recommend you guys checking out. I'm not giving you financial advice, right? I'm just here giving you my thoughts and opinions. So 4 stocks that you focus on. And then once you get to about 30 years old, you'll probably have let's say you'll have about 50,000 into all these 4 stocks. You take in some profits and then you start slowly diversifying into better stocks. Like I said, it's just something that you have to check out for yourself. But it's worked well for me. It's worked well for a lot of people that I'm working with, family members especially. I do that with a lot of people that I coach, that I financially coach and stuff like that. So it's just a system where you kind of go aggressively because you have faith in those stocks. Okay. If you have faith in a company that is going to go up and they have a record of going up, then that's just something you got to check out. That's all I want to talk about in this video. If you guys do like the video, please like, share, and subscribe. If you have any questions, let me know in the comments down below. Check those links, Acorns, Robinhood, all that stuff. Sign up, guys. You're not going to regret it. And that's it. That's all I want to talk about in this. If you found it informative in any way, please, let me know. I'm here to try to give you out as much information as I can and explain to you guys things as simply as possible. And I know what people are going to be hating because they're going to be like, why aren't you diversifying? For me, it took me a while before I started diversifying. So this is pretty much it, guys. You don't have to diversify if you feel confident about the companies you're invested in. So that's all I want to say about that, guys. But thank you guys for everything, and I'll see you guys next time. So peace out.